Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your financial market wrap-up. And we are now on Tuesday, and this is the 23rd of May, 2017, about 4:15 p.m. Central Daylight Time. So when we look at the stock market, another day of gains. And again, the NASDAQ just a powerhouse on this rally. And unfortunately, every time the market breaks, those that just come in blindly and buy seem to get rewarded. Maybe I'm the one wrong. Maybe it's not so blind. But if you think about the Brazilian situation and the meltdown when the stock market went down, we've recovered, but we have not gone to new highs. If we don't, you have the very strong odds of a trade top in place. If we do, it's another situation of you break, you get bought, and you go on to make new highs in the marketplace. Remember, we have OPEC coming up on Thursday. If you watch, and when you go home, you'll see on the news, Prime Minister May of the UK just went to a critical level for the UK in terms of terrorist threats. Now, that's the highest level they had. They've been running at severe. Critical often is another word for imminent. So this is probably not the end of it. And it's sort of interesting that, again, an American concert is where these events happen. As we look at the Dow, I'm going to look at the weekly chart and say this 21,010 level, important. On a close-only chart, and this is a daily close-only, getting over 20,954 would be important. You haven't done that yet. When you come to a daily bar chart, you can see this importance of this 21,010 level. I can count one top, two tops, three tops. Actually, it's 1, 2 at 21,010. They're identical. This was 20,095. So this next run to the 2100 level, super critical should it get there. If you were to come up and get a reversal down, make a higher high, not go anywhere and then reverse down, I would expect to see the markets sell. Why? Because you'd still have the lower highs and lower lows in attack. So I think tomorrow a very key area is that 20,995 number. You see it here. You see moving averages. You're now right at that pivot for them, and that's what I call that line in the sand. Here is what's interesting. You were at 20,474 just days ago. You've added 500 points like that to this index. And again, the people that pay no attention to the trend and just buy, and they bought, I think, near that 100-day average, they get the big reward. Not complaining about it, it's what it is. I'm also looking at the potential as to what the Bollinger Bands are doing. They're going sideways, but to get up to 21,042, you got to get through that 2110 area. Should you do that and you fail there, that's one thing. But if you get there and you close over those numbers, so much for my theory that you might have an outside day. Not an outside, you might have a triple top area. That would be thrown out. As you take a look at stochastics, momentum is still pointing up. So what we have is a market with upside bias since it's over the 18-day average, momentum pointing up, but the trend of the market is defined by what is the pattern of higher highs, higher lows, or lower highs, lower lows. It's bearish. Everything's fighting each other in this market. In the NASDAQ, another solid day of gains, and here you have to get over 57, 27, 25. Now, you got to 57.18, but it's not a triple top pattern. We know this has been the strong market. We know the S&P gets a bit of support on it because you have so many of the NASDAQ stocks, about 7.5% of them, weighting this in the tech area. Here, too, you have an important area. You're knocking on the door of 2404. 6 points away. Excuse me. I have allergies, so I hold them in as best I can. And you're overbought right here. In the Russell, the market is still in a downtrend. Now, this is the market that is the bearish part of it at this point. You've had the lower highs, lower lows, while momentum's pointing up, you're still under the 18-day average of closes. What you did is you got under the 100-day average for a few days. Now you're coming up to challenge back to the 18. Unless you take out 1399.20, this market is still remaining with the pattern of lower highs, lower lows. So interesting day tomorrow, I'm telling you. And in the VIX, take out 1018, it's probably a warning sign that all that rally up to 1630, just a flare, no more than that, because you then have a higher high, lower low pattern, unless you take that out. Now, unless you don't take it out. If you don't take it out, you'll have a successful test of higher lows, higher highs, get back over that 18-day average, and traders will say maybe that was just it, a correction. We have finally seen something of a bottom. I can't answer all this. I don't know, and the charts are at a crux. They are at a key area right now. The bond market is ahead of itself in reacting to the FOMC. I looked before I came on for this. It's the 13th and 14th of June that we get the two-day FOMC meeting. There's still a 78, 79% probability the Fed is going to raise rates. And yes, we've got softer U.S. economic data. Look at the housing numbers today. Look at the Richmond Fed numbers. They weren't overly strong, but there's a but. If the Fed would not raise rates now, I think they send a message the economy's soft, and that could be a problem. I think they're going to do another one of these. They're going to raise rates, then they'll step back, and we might not even see a rate hike unless data really picks up in the latter part of the year. I would think that if you had today's type of data coming out, the Fed would find it actually hard to raise rates again in September. But we've got a lot of time. What I'm thinking is June is still one of these time frames on the table, a strong one. And the pattern now, well, you could start arguing that you got lower highs and lower lows, and maybe you're going to carry back down to the 18-day average of closes. I would view today's highs in bonds and notes important. It's an outside day. Take out an outside day's highs in the next two trading sessions. I call that a bear trap, and you often go back up, and in this case it would be the upper Bollinger Band in those cases. But if you look at the 10-year notes, you got lower highs, lower lows. Markets online, if it wants to break, maybe it gets back to that 18-day average to figure out what to do. Dollar index back over the Bollinger Band. Now, if it tomorrow is a weak dollar and you get the embedded readings here, they can lock in. So you need one more day where the K and the D lines go sideways under 20. That often doesn't occur, so I could make an argument for more dollar rally. By the way, what was today? Tuesday. Often you hear traders talk about Tuesday reversals. You had them market after market, even the euro currency, right on back down. So you had 2 days in a row over the upper Bollinger Band, back under it. You're developing an embedded reading. You can see here both numbers are over 80, both numbers over 80, and right here both over 80. So you've got one. Now the question is, how deep the break before you turn the red line back under 80? Until it closes back under 80, I think traders will be buying this market on the pullbacks. If it loses that 80 reading and gets under there, I think a test right away of the 18-day average of closes is set up. So the question is, what does it do tomorrow? British pound. The market is overbought. The market's got a pattern first of higher lows and higher highs, but all of a sudden it's stalling. Yesterday's high was 130.53. This high was 130.59. So what we've got is a pattern that's turned into higher lows but lower highs. I hate when that occurs because you start losing your momentum. The market is also getting caught and unable to exceed rallies very far over that upper Bollinger Band before it gets thrown back, and it won't take very much to get it down to the 18-day average of closes one more time as it's developing this sideways action up at these levels. Japanese yen, in terms of the swing line, reverted back to a downtrend, the swing line only. Lower highs, lower lows. It's still over the 18-day average of closes and the 100. Interestingly, the 18-day is flip-flopping day after day. Should it be at or above the 100-day. It was above it yesterday, below it today. If prices were to close under that, would it be called a bearish crossover? It's hard to say. Typically, when you get this happening, it happens when already prices are under it. I've seen it above it like that, and I don't know what to do with it. I've done a lot of research on it, and I can't come to a conclusion. In the crude oil market, well, there's three choices that I'm writing about in tonight's report. And here's the three in front of OPEC from what I just read. 6-month extension, 9-month extension of production cuts, and there's even a year extension to be on the table. Now, what I did not read is an increase in other words, the depth of the cut from 1.8 million barrels a day maybe to 2 million barrels a day. I don't know. We'll find out. What I do say is you're going to get an extension. The question is the length of time. The popular thought is 9 months. Now, that ties in with the Saudi Aramco deal. Remember, they're going to need higher prices for that selling of their IPO here in America, and they would want that market probably up into the $60 range for that. The problem is, even $60 doesn't solve the Saudi problem. From what I'm reading, they need closer to, what, 75 to balance their budget. But they're only one country. They're not the whole thing. Gasoline market got up with an outside day down today, so it made the highest high of the move, closed lower, outside day. It's also caught a key reversal against, again, the upper Bollinger Band. If you take out this high, then it's a bear trap, and you probably have a run shot at the, and the word is shot, I don't know if it's going there, at the 100-day average. If it doesn't take it out, maybe this is the sign where you finally get a break. Did we embed? Well, let's take a look. On this day, both numbers are over 80, both numbers over 80, both numbers over 80. So the answer is yes. The market can afford a break here, and until the red line closes back under 80, the bulls are in control. In the nat gas, while the market closed at 331.20, it really was trading around 333 on the close. I was watching it. Momentum turned down. You still have the pattern of higher lows, but now all of a sudden you got lower highs. Not the prettiest of patterns. Take out 325.60 and things get bearish. Go back up, especially over 324.80, maybe you can get to the 348 level. I say the pivot's going to be around that 334, and that's going to be the battleground tomorrow. You know, one of the things I like to do is teach and offer ideas, and I do that in my morning video. Now, I also do it, of course, in my writings, and I take a lot of pride in what I do. I write a lot of information. I view that what I write is a synopsis of the day's important events and what might lead tomorrow's trade, or if I write at midday, the rest of the day's trade. Got it? So tonight I'm already writing about what tomorrow's going to hold. You can get it to my data, by the way, by either calling us or going to our website. You need a user ID and password if you haven't had free access to it before, and we'll be happy to give that to you. One of the crux of the things I do is my morning subscriber video. You talk about trading ideas for that moment, for that day. Well, I record at 8:30, publish at 9 Central Time, and I'm throwing idea upon idea at you. If you're a trader that likes in and out trades, I'm going to throw those at you. If you're somebody looking more position, I'm going to throw those at you. Going to throw out even ideas maybe on options where you can talk to your broker and get some ideas on that. Then at 11:30 in the morning, I write my news report and publish it. That gives you an idea of what I'm seeing the rest of the day. And then in the evening, by 8 p.m., I'm putting out another written update with all of the stuff that's going to affect, ideally, tomorrow's trade. I'm already well through that, and I've got it ready to go. How do you get access? If you haven't tried it, it's right here. That's the best way. Now, if you've tried it and you want to buy it, this is one of the few times I offer a discount. It's going to be ending very shortly, and I mean very shortly. I take $20 off the subscription for 30 days. Now, if you're not a trading client of ours, it's $60 for 30 days. It'll go to $40. All you do is type in Ira 20. So you can click on the form up here that you see on YouTube. That's going to take you right there. If you go to our website, you can go under Ira's Research, subscribe, fill it out, put in Ira 20. You've got it. Doesn't matter if you do it caps or not, it's going to take it. Those are the best ways, and of course calling us always works at 866-973-2077. If you want a free trial, Well, you can always go to our website, by the way. You'll see the free trial offers at www.iraepstein.com. And in some websites, you'll see underneath us, it says click here for Ira's free offers. Other than that, folks, hope you click on this YouTube sign up. I think you'll like it. Remember, you can quit at any time. Take advantage of the $20 off. I'm Ira Epstein. You have a good day.